Hello friends, welcome to Arshit Traders. And friends, today we are going to see the one of the important thing to beat our inflation through which mode of investments. So first I am going to share you Nifty went into a crucial levels and where we can expect Nifty will trade in this year. So friends, basically I thought like 17,500 to 16,500, but it went all through down and it came around 16,800 also today as of closing basis. And if you observe now, the trend lines, so which the horizontal lines are support and resistances, and if you observe here, these are the trend lines where the rejection happened on day candles, and these are the supports where a reversal happens. So one thing, if you observe here, so on and this is the level which it is showing, like if it comes to touch here or rebound, so this is one case, or the indices will come to touch 15,400, likely to be. Why? Because if you see here, so many days this 15,400 is a good support, so we can expect like 15,400 will touch and then it will take a reversal, or maybe tomorrow it will take some reversal by making a day low uh, Friday. So this is what I am expecting, and the trend lines and the things which you seen is exactly will play a key role, friends. So which is like 15,200 and 15,400 and 15,200, like that. So similar patterns, if you zoom it out in the screen which you are looking, you are going to see where the resistances and supports are there. And next, coming forward, how we are going to beat inflation. So friends, after going through so many articles and so many things, so I finalized this article as the best one to explain you. So investment tools to beat inflation in India. So friends, if you observe here, what it mean inflation. So the pricing power, that means the purchasing power of a person on an average represents month on month, which is CPI data, which represents inflation. So if you observe here, inflation reduces purchasing power. If inflation high, that means on an average how much the person is spending, which is very high, means that he or the person having good amount of money, even the prices of commodities are going up and up, he is able to pay higher amount to buy that product, so which is a negative sign. Why? Because the companies which are manufacturing the goods is, so due to some geopolitical issues, the raw material prices increased. Due to that, they increased the price of the product. Still, the consumer able to pay that high amount of product cost to get it. So this is a negative sign. Why? Because so below poverty people may suffer a lot. So due to this, government takes some steps to reduce this inflation. So the upper band people will pay the price which the soaring prices, that is increasing prices to get their product, but the below poverty people or middle class people will suffer a lot to buy the products, commodities, which to survive for their livelihood. For that, what happens means mainly government take measures to control this inflation. So which is, this is a total concept, a total cycle, by absorbing money from the market. Market means in circulation by some instruments like a repo rate, a reverse repo rates. So these are the things recently government taken some cash reserves. So like this, these are the some key things, RBI or any country's central government or central banks will take decisions to increase or decrease rates according to the inflations. So whenever high inflation, that means max the inflation levels are good, means 4% to 5%. So below these levels looks good, and very low inflation is also not a good thing. And if you observe here, retail inflation in India increased to 6.95 in March 2022, and today we got the latest March inflation data, which is 7.69, I think, and which is a very high trend. So see here, uh, April inflation, India. See here, April inflation 2022, 7.79. So this is the highest consumer price index for the month of April. So friends, 40 years, see here, remaining near 40 years high. So to control this, already government hike repo rate 40 basis points in this month itself. And what we have to see, so see here, retail inflation we have to be beat. That means what you called, if you buy any product, you are keeping more money on that. So you are keeping here like in 2020 this an exceptional due to COVID, so much of things are there. But if you observe here, so 3.74 I mentioned, right? 4 to 5, so 4 to 5 is a good thing, but beyond and below to these levels, so see, below 2 is not good. And to beat inflation, so whenever you are invested a 1,000 rupees, so you get 4% in the year, but the rate of inflation is 5.5%, is your return on investment is less than inflation rate, effectively cancel out the returns you earned. That means, so by investing your 1,000 rupees or 2,000 rupees somewhere else, and you are getting so much of amount, but the inflation which is beating you, because you are keeping 5%, so 5% extra money to buy the commodities, but you are earning 4% only for the money which you keep as an investment in any sector. So by this, the return which you earned was cancelled. That means you are deficit by 1.5% as per these calculations. So you earn 4%, but the inflation is 5.5%. Still, you are deficit with 1.5%. So this is how they are mentioning. And coming forward, friends, how you are going to beat it. So one thing, friends, anywhere risk is there, but the risk reward, that means you are taking which investment is the main thing to beat this inflation. So there are so many ways, we are going to discuss few. So first one is diversification is very 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 one of the most important thing on investments. So there are multiple ways for investment. One is stock market investing, and another one is land purchase like real estate, and another one is investment on education, and another one is investment on gold and interest. That means in Telugu we called it as a vaddiki tippadam. That means giving money with an interest of 2 rupees 3 rupees to another people, that means lending. So this is, so these are the five basic investments, so very very important investments, friends, these five. So prefer which area you are. So basically you are like a 35 plus, so good to invest in your children's education. So you are 25 plus, just started earning, so your investment will be on like equities or buying a land. It is not a good at all. Why? Because initially you didn't have that much of capital. So investing in gold, investing in stock market, and investing in businesses which you are familiar. So this is the area where you can possibly look for it. So if you see here, equity investment, direct investment in stock market is better to beat inflation in a long run. So however, there may be times when this is not the case, but in long run the stock market has historically provided returns that outperform inflation. So this is one of the thing. And the next one is equity mutual funds. So if you didn't know about direct investing in equity, prefer mutual funds. So mutual funds have some expense ratio. That means they will take some amount, so which on which you are paying on monthly, that is expense ratio. So prefer low expense ratio and high return mutual funds. So in my view, so it is not a recommendation, but in my view, Tata Digital Fund and ICICI Prudential, like ICICI Technology Fund. So these are the two funds which have global presence on IT. And as you all know that I am a well invested, or so not at all. So that is not the way I have to explain. So I am very very positive on IT sector, which created you a good wealth on a long run basis. So that's my view to explain. And next one is ETFs. So exchange traded funds. That means these funds only invest on Nifty 50, Bank Nifty. So like that, ETF, Nasdaq. So like that. So these having like less expense ratio and returns also little good over a long period of time. So take this as a 5 year 6 year period, you can beat inflation and you will get decent amount of return. And next one is, friends, gold. So as I previously also explained, India have traditionally invested in gold. So next one, gold ETFs. So this is digital gold. So some exchanges provides to invest digitally on gold, so like gold ETFs. And real estate, so previously explained, right? So real estate investment also a good to outperform inflation in India. So recently I asked one of the business person, like they have a good retail stores in my area in Renugunta. Few people know Tirupati, like Balaji, Lord Venkateshwara's hometown, like Tirupati. So he mentioned, sir, where you invested your money, so which you have good amount of returns, right? So over a period of time you are running this business. So where you are going to invest your money? So we don't invest in stock market and all those things. We invest our returns in only land. By buying lands, we will keep that aside. So like that. So over a period of time, land value going to increase definitely. So this is what happening up to now. And over the period we have to see, we are getting like metaverses and all those things, how things will change. But still, friends, so this is what going up to now, real estate also. But going forward we have to see how they will change. and real estate investment trust, REITs. So this is one of the difficult concept to understand, but still I will tell you something. Like friends, this is one of the tool where people invest in these type of companies, and these type of companies are going to invest in real estate companies, or luxurious malls, or office complexes like that. And I will show you one of the major example for this is, so recently listed company. So this is Mindspace Business Parks, REIT. So real estate thing. So they have like so many offices in Hyderabad. Also, we have a like office park like Mindspace. So this is a listed one. So you already know which I am explaining. So what I am explaining, I shown you there. So this is one of the area where you can invest. And next one is debit investments. So bonds and debit funds that invest in bonds. So literally very low interest returns will generate in this. And going forward. Debit mutual funds, alternate investments like hedge funds. So also investments in hedge funds or startups through unlisted shares can help in beating the inflation. So rebalancing your portfolio. This is also very very important. So recently I mentioned this thing, balancing your portfolio, because before falling IT stocks itself, I done a video regarding this. So going forward, inflation will going to beat. So it's better to take a call on IT sector stocks and re-enter after a little comfortable valuations. So if you see my video in the past, like recession, I done a video, and Nasdaq is falling continuously. What about our Nifty and Bank Nifty positions like that? I done a video and go through that. And ending is like inflation is a long-term socio-economic phenomena that has a cascading effect on individuals. So it's real, friends. To beat inflation, various market strategies has evolved. Inflation is primarily caused by cost push or cost demand situations. So it is completely possible to outperform inflation, but it is necessarily to realign the portfolio regularly to readjust the current inflation levels. So this is how we are going to beat inflation in this 2022 and 2023. So 2 years going to be the period of inflation. But one thing I am going to show that, friends, if factors favorable India is going to be beat. So going to beat inflation levels with its GDP. So friends, thank you very much, and I hope you all love this video. Thank you.